And this is Bloomberg Technology. Coming up in the next hour, the bulk of U.S. tech earnings are behind us, and the FANGs have bounced back. But Morgan Stanley says a tech sell-off is just about to start. Plus, Google wants back in China. The search engine left the mainland in 2010 over Beijing's censorship policies, and now it's working with the Chinese government to curtail search results, much to the chagrin of employees. And proposing to revoke California's authority over greenhouse emissions and electric vehicle mandates. California Attorney General Xavier Becerra has vowed to maintain the state's clean air. We're going to hear from him ahead. But first, to our top story, the bulk of big tech earnings are behind us, with just Snap left to report this week. Apple investors are breathing a sigh of relief, but the Nasdaq Composite lost as much as 4.2% since its July 25th high as investors sold shares of Facebook, Netflix, and more. And Morgan Stanley is now arguing this is just the start of a bigger sell-off in U.S. equities driven by tech. The bank recommended selling U.S. tech stocks a month ago and now says traders are starting to heed their bearish call. Joining us now to discuss from Washington, JMP Managing Director Ron Josie in New York and Bloomberg TV's markets editor Romaine Bostick. Romaine, I'll start with you. What is Morgan Stanley saying here? What's the argument?
Well, I mean, their argument is really one based on one, valuations, but also just the growth that we've seen out of these stocks. I mean, Morgan Stanley's been banging this drum for a while now. And, I should point out, a lot of people have sort of called the end to the tech rally several times this year. And the tech stocks continue to sort of find another leg up. It's certainly possible that we could have reached a peak. There are other analysts other than those at Morgan Stanley, other strategists, I should say, including over at Oppenheimer, that are also making similar calls and recommending that folks look to other areas. But, at the end of the day, we had a very good earnings quarter. And the question is whether they can repeat that come the third quarter.
Ron, you cover Amazon, Alphabet, Facebook. Would you agree with Morgan Stanley's assessment here?
Well, I think there's definitely a lot more uncertainty in terms of the cost side, in terms of all the debate going on with security and privacy and whatnot. But when you look across, at least I cover the internet sector, so when you look across the sectors in technology, when you see the secular growth that's continuing here, it's hard to say that tech doesn't have continued upside. When I say tech, I guess I mean Google and Facebook and Amazon and others. Specifically, online advertising continues to be extremely strong from our perspective. Usage and engagement suggests they continues across the space, and frankly, Facebook, Amazon, Google, and others are just continue to innovate in their products. So it seems to me that there's a lot of secular growth that can continue.
Let's talk about Facebook specifically, because I believe you lowered your target there, but you're still optimistic. Why? Yeah,
I mean, we lowered our target simply just given the increased risk around the guidance they gave, risk around increased costs, especially, around privacy and security. But frankly, when talking to advertisers, when thinking about the product, we think the product is awfully sticky. We don't think engagement on core Facebook is going to materially deteriorate. And if it does, we think Instagram is a big winner there. And specifically, when it comes to the monetization of it all, yes, Facebook is trying new things around perhaps showing stories more often in your news feed and what have you. But when you talk to advertisers, Facebook still has the best targeting capabilities out there, bar none. And until that changes, I think they're going to continue to see an influx of more dollars coming online.
Okay, but what about their credibility? I mean, there's this new story out today about Facebook reportedly requesting information about users, financial information from banks. Facebook has said that they're not actually asking for data, right. But these products investors are optimistic about. But this credibility cloud seems to be hanging over the company, and I wonder when that goes away.
Well, I do think internally they have prioritized privacy and security across most any other investment that they're doing. And, when you see stories like this about potentially integrating someone's checking account into Facebook, it seems a little bit of a stretch, at least for now. So frankly, I sort of go back to the checks that we're doing and talking to the company that security, privacy seems to be number one. If they do start working more closely with financial transactions, perhaps that's more towards their e-commerce and and what they call their marketplace business. But I think that's very early days. And so I guess I don't believe that this integration that we're talking about with banks where you can see maybe all the data, I have a hard time believing that's gonna happen here soon.
Now, Romain, despite all the hype, tech actually hasn't been the leader in this market for the last couple of months.
No.
Who's been the leader?
There's been quite a rotation. In fact, I mean, if you look at the NASDAQ composite, the most interesting thing is the two leaders have actually been insurance and then healthcare, basically the biotechs. And then even if you break down some of the S&P sectors, again, tech sort of falls down into maybe like 5th place if you measure from the end of June. And this is partly what a lot of analysts are saying. And Ron kind of touched on this. It's just the idea, not many of these analysts and strategists are saying that these stocks are going to sort of take a dive, but they're saying relative to other sectors, given how high value they are, that there might be time to sort of rotate elsewhere. There's also a lot of macro trends with folks rotating into some of these more defensive sectors. And if you're in these tech stocks right now, there's a call by some of these analysts that you might want to protect yourself given that rotation.
Now, I do have a chart here in my GTV library showing the weight of the FANG stocks in the S&P. You see a dip at the end, which occurred on the back of Facebook earnings. Meantime, Ron, Amazon has been one of the factors in this market that's been driving it up. And you raised your target on Amazon, and you say you're confident the company will continue to take wallet share. Why?
Yeah, so just first on maybe the prior commentary, I think at the end of the day, it's results that's going to drive multiples higher and the stocks higher. And frankly, when you look across Facebook and Google and Amazon and many, many others, I think you still see a lot of tailwinds around the secular shift. And from Amazon in particular, Emily, it's actually fascinating. They continue to drive very strong top line growth. And yes, Whole Foods helps there for now until you start comping that. But the core marketplace is doing extremely well. On top of AWS seeing accelerating growth, their advertising business is something that's just beginning. And the fascinating thing about advertising is the more you advertise on Amazon, the more probability that your products show up higher in natural search results on Amazon. So it could be, the more you advertise it, the better it is overall. And so when we think about all these names and the stocks and where they could go, it seems to me, at least from a profitability perspective, Amazon has more upside than perhaps what are in targets today. And I'd argue that might be the same for Facebook and Google over the long term for sure.
And what about Alphabet? Alphabet's positive earnings were rather a surprise. It seems you're maintaining your optimism there. There's this controversy about the company trying to get back into China, which obviously is a huge potential market, but certainly riddled with, it's a minefield, in fact.
Yeah.
What are you watching for when it comes to Alphabet? What are the specific trends that you're excited about and concerned about?
Yeah, I mean, actually looking across maybe the top large caps in the internet space, I'd say Google, Alphabet produced one of the strongest quarters across the space. And one of the reasons is you're seeing 26% growth or maybe 23% growth ex-TAC on the top line for net revenue on their core advertising business. And the key there is perhaps we're entering a new phase within their advertising and search where AI and ML is a lot more integrated in everything that you do. And if that's the case, then maybe that attracts more advertisers to basically more advertisers on the platform that then advertise more. So we come out of this earnings cycle with the large caps, largely reported and feeling very strong about where Google can go with AI and ML being more incorporated in their core ad product. Remember, Emily, a few weeks ago, or actually mid-July, they revamped their ad product not too long ago. So there's a lot going on here on Google that's interesting. The China stuff, we'll have to see what happens. I remember when they pulled out 8 years ago or more, and I think we'll have to see what happens there because it definitely is a different market for sure.
I remember as well. I was in Beijing covering China at the time, and it was huge. It was a huge exit. Romain, what are you going to be watching for over the second half of the year for signals? Well,
I have to tell you, I mean, it feels like there's a little bit of a rotation even within the tech sector. When you look at the earnings that we had that just passed, I mean, it really wasn't the internet companies that folks got enthused about. It was a lot in the semiconductor space and even in the hardware space. I mean, we talk about 27% year-over-year EPS growth for tech as a whole, but you have 52% for the semiconductors and something like 30+ plus percent for hardware. And then when you look at the market reaction that we had for a lot of these internet stocks, it was among the lowest when you measure it by sectors. It just really wasn't there. So it's not so much that these companies aren't growing, but it's that they have reached a sort of a maturation phase in the eyes of a lot of market participants, and they're looking for yield elsewhere. And if they can find it in some of the more, I guess, middle cap type of tech stocks, that's where they're going. It'll be interesting to see what type of catalysts we can get going forth from these big behemoths like Apple and Alphabet, but they've got to show what the next product is or the next service is that's going to justify the valuations that they're at right now.
All right, Bloomberg's Romaine Bostick, I know you'll be keeping an eye on it all for us, and JP Securities' Ron Josie. Ron, thanks so much for stopping by. Well, Japan's SoftBank is considering a public offering for its domestic wireless business that could become the biggest IPO ever. Bloomberg has learned that SoftBank is talking about selling a third of SoftBank Mobile in this offering, or about $30 billion worth. Remember, Alibaba made its debut back in 2014 with a $25 billion IPO. That's the biggest public offering ever so far. Coming up, could an ETF for cryptocurrencies help the price of Bitcoin? Asset management company Bitwise is optimistic that its bid for an ETF could be the first one approved by the SEC. We'll talk to CEO Hunter Horsley about why next. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Bitcoin fell below $7,000 to its lowest level in 3 weeks. This off the back of last month's rally, which drove up the price of the biggest cryptocurrency by almost a third. That exuberance has been dampened by regulatory and other concerns. Meantime, the competition to launch a regulated ETF for digital assets continues, and one firm is optimistic that its bid could be the first to be approved by the U.S. SEC. In late July, San Francisco-based asset manager Bitwise filed for an exchange-traded fund that would track not only Bitcoin, but 10 other cryptocurrencies. This is the first application of its kind. Others like the Winklevoss company Gemini have filed for Bitcoin-only ETFs, but the Winklevosses' bid was rejected. So why does Bitwise think it has a stronger case? Bitwise Asset Management CEO Hunter Horsley is with me here now. So why do you think you have a better shot here?
Thanks, Emily. Yeah, so the news from us is that we just filed the first ever S1, so it's a prospectus, for the first cryptocurrency index fund ETF. So the distinction here is, since 2013, people have been filing for ETFs that would just track Bitcoin, that would just provide investors with exposure to Bitcoin. And we filed for an index product, so it'd have a basket of 10 coins. We've been managing a private version of the fund that's open to investors today since last year. And in our experience managing that product, our feeling is that the issues that you have to get comfortable with to approve an ETF, a listed vehicle, custody, trading, taxes, how you value the assets, these are all things we've been dealing with since launching our private vehicle last year, and we think that you can effectively operate a public vehicle.
I've got a chart here. My GTV library is showing the price of Bitcoin compared to the other top coins year to date. Obviously, we know there's been a slide. Do you think if something like this was approved, that would help the price?
Yeah, so one of the ways to think about prices in crypto is simple supply-demand. And if a listed vehicle, so an exchange-traded product or some other listed vehicle were approved, you can imagine that a number of investors through 401ks, through their brokerage accounts with Fidelity and Schwab, institutional investors who don't want to work with one of the crypto brokers but would be comfortable purchasing a listed product through their existing counterparties, prime broker, brokerage, et cetera, would feel comfortable investing in the space, and that would create new demand that would impact the prices in the market. So I think it's reasonable to expect that if an ETF were approved, that you would see prices lift in the crypto space.
I know the Winklevoss applied for a Bitcoin-only ETF, but does the rejection there dampen your hopes? Yeah,
so I think people have been applying for cryptocurrency Bitcoin ETFs since 2013. And I think the SEC's response consistently has been to be thoughtful. They're very knowledgeable about the space. They actually put out a letter in January outlining 32 questions that they would have to get more comfortable with to approve a product. So I think that they're very thoughtful about the space, but they're being cautious, and that's what you would expect from them. They want to make sure that if they approve something, that it'll behave as expected, that investors will be getting what they think that they're getting.
So what can you say to assure them about the volatility, about liquidity, about custody, about market manipulation, about arbitrage?
Yeah. Those are the issues. So custody, volatility, marking the price. I think that all of those things in our experience operating a vehicle are in a place now where you can securely and effectively operate a vehicle. So we look forward to having conversations about this with the SEC. But our
there was just an exchange in Asia where they couldn't cover the losses because the price changed.
Yeah, so I think what you're referring to is there was a huge short position on OKX, which is a Hong Kong-based exchange, and they had to claw back some investor holdings to cover that short position.
And everybody lost in terms of the profit.
Yeah, exactly. It was sort of like an austerity measure. They spread the losses across investors who had their assets on the exchange. We've seen this before with exchanges. So if you keep your assets on the exchange, there can be issues related to the exchange. There can be issues with a hack or some incident like this where they take an action that's not favorable for investors. But that's sort of I would set that aside and say that that's an issue with exchanges and something that obviously exchanges need to manage around and work to avoid in the future. As it pertains to a fund, an index fund like ours or an ETF, those assets should be held in cold storage, so off exchange. Mm-hmm. So in the case of OKX, you wouldn't be exposed to that scenario. The best practice around holding assets is what's called cold storage. Yep. And there are a lot of options available for that today. Nomura announced a joint venture where they would be offering a cold storage solution. And so our feeling is that those issues are in a place where you can effectively manage a vehicle.
Okay, well, you'll have to keep us posted on your progress. Hunter Horsley, Bitwise Asset Management CEO, thanks so much
for
stopping by.
Yeah.
Still ahead, California is going head-to-head with Trump over his new clean air proposal. Attorney General Xavier Becerra sets up the legal battle next. This is Bloomberg. President Trump has once again taken aim at his predecessor's environmental legacy, this time rattling automakers throughout the country. On Thursday, the Trump administration proposed to roll back fuel economy and emission standards after 2020, while preventing states like California from setting more stringent greenhouse gas rules as well as electric vehicle sales mandates. Alongside 19 other states, California has vowed to take a stand. California Attorney General Xavier Becerra joined Bloomberg's Balance of Power to talk about this pending legal battle.
We've actually already sued on a previous action in the EPA and the administration trying to redetermine what they had already concluded beforehand several years ago. And so what we're trying to do is make sure that the EPA and NHTSA follow the law, their own laws that require them to try to move us forward in cleaning up the air rather than letting it get more polluted.
But they would say, certainly, sir, that they are moving it forward, that the standards that they're pursuing are tougher than the federal standards used to be. It's just there was this exception, rather unusual exception for the state of California, but it's time to get it all the same. Why isn't that consistent with the statute?
Well, you're conflating two different issues. California has been setting environmental standards on air for quite some time. In fact, before the Clean Air Act even got passed at the federal level, before the EPA started to regulate clean air. And so we've been doing this for a while. That's why for close to 50 years now, California has had the ability to set its own standards. That's different from what the administration decided last week to do, which was to undo the national standards. California right now is not asking to have separate standards from the rest of the nation. We're living with the national standards that were agreed on some 5 to 7 years ago. The administration is the one that's trying to break those standards and backslide from them. We're saying what they're trying to do not only is a violation of the law, but it's arbitrary and capricious.
Well, I guess I am a little confused because Parliament can't bind itself. I mean, the government can change its mind. Once it has a rule in effect, it's not cast in stone forever. So they're saying we still are tightening standards overall from what they had been. It's just it won't be as tight as it was under President Obama.
You're right, David, that the government can change its mind, but the government can't change its mind on a whim or cavalierly, because Americans rely on the law. So if you're driving 65 miles an hour on the freeway and Today, the government says, oh, we're going to change that to 45, and you've not had an opportunity to comment on that or to find out about it. That would be a violation of the law. It would be arbitrary and capricious. And what we're saying is that the EPA and NHTSA have acted arbitrarily and capriciously against the law. They are undoing standards that they themselves set. Not only that, but they're violating the requirements under the laws that apply to them that require them to continue to make advances to clean up our air.
Okay, so aside from the lawsuit, how open has the government been in negotiating, coming to the table and talking to you?
Not open at all. And that's why we're at this point where we have to likely sue the administration to try to stop them from violating the law. And so if they were willing to sit down and actually have serious conversation, perhaps there could be a chance to make some progress. But for the past year or so, it's been clear from their actions that they have not been interested in really speaking, because they keep taking actions that not only violate their own laws, but show that they're not interested in having serious conversation.
Given this, how long do you expect this litigation to continue for?
Well, that one is a tough one to answer. It depends on how obstructionist the federal government is in providing the data. Remember, none of these regulations is put in place without long periods of comment and with lots of facts and science put into the conversation and discussion. The administration really didn't do that. How much they're willing to reveal of what they used to guide them in trying to undo, to backslide, will determine how quickly any lawsuit moves forward.
So, Mr. Attorney General, let's just assume for the moment it's going to be years, because you and I have both been involved in complex litigation. It doesn't tend to get resolved right away. It doesn't go right to trial. What happens in that interim? If I'm General Motors, if I'm Ford, if I'm a major auto manufacturer, how do I know which rules to comply with?
Yeah, that's the automakers understood the value of having national standards, and that's why 5-7 years ago, when those were agreed to, it was a great accomplishment with the automakers at the table reaching those national standards. Right now, it depends on what a court does with regard to the existing national standards. Would a court agree with the Trump administration that it's okay for them to break these standards without the right evidence, or will they agree with the states that would sue to say that those standards should stay in place until we can reconcile the Trump's illegal and arbitrary and capricious actions? Regardless of that, then you get into the subject of California and the fact that we have had a waiver for years to move forward to keep our air as clean as possible, because as you probably know, California, it's crucial that we try to make improvements on air quality, because it's what's required for us to keep our economy moving forward, to be the economic engine for the country, and now the 5th largest economy in the world.
That was California Attorney General Xavier Becerra earlier on Bloomberg Markets. Now, coming up, Google abandoned China in 2010, taking a moral stand against censorship. Now it wants back in on the world's 2nd largest economy, but at what cost? We'll discuss next. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. Hot off the Intercept report that Google is secretly trying to get back into China with a censored search engine comes the news that it's working with Chinese companies on cloud offerings. Google is said to be working with Tencent and others to offer its cloud services in the world's 2nd largest economy. Remember, it was just 8 years ago that Google abandoned mainland China because it refused to comply with Beijing's censorship practices. So what's changed? To try to get to the bottom of that, we've got our Bloomberg opinion columnist Shira Ovide in New York, and from Washington, Bob Borsten, Senior Vice President at Albright Stone Ridge. And before that, he spent 7 years as Google's Director of Public Policy and was on the original team that determined Google's entry into China in 2006. And Bob, I was covering China from Beijing when Google left the country, and it was a huge stand that Google took, and I can't imagine what it was like being in the room as you were debating this in the early days at Google. What do you make of the fact that the company is now considering going back in and agreeing to the same censorship practices that it took a stand against?
Well, it doesn't surprise me to begin with. I mean, I think there are three factors at play here. First is economic. They see a market of 770 million plus internet users in China, and I think that's incredibly important to them. They want to be a player. The second thing that they have to look at, however, and now we go negative, is the political side of this. Already you're seeing senators here in Washington asking questions about why they're doing this, and also you're seeing a number of human rights groups taking exception. And finally, there's a moral question. And part of the reason that Google pulled out in 2009, 2010 was moral. And certainly nothing has changed on that front. In fact, Chinese internet regulations are now a lot harsher than they were back then.
Exactly. The laws are even more severe today than they were 8 years ago. Senator Marco Rubio did speak to Bloomberg Thursday about this very issue. Speaking of the reaction from lawmakers, take a listen.
I'm not concerned about it. I'm outraged by it. But here they are. Number one, they won't work for the Department of Defense because they don't want to be involved in killing people. But on the other hand, they work closely with a university in China that provides all of the technology for the Chinese military. And then here they are in the United States talking about how they stand for free speech and all sorts of things. But they're prepared to go into China and help the Chinese government censor information and deny people access to information. So it's hypocrisy. It's sickening.
Shira, you have an excellent piece weighing the pros and cons, mostly the cons of this. Talk to us about at what cost this would come to Google. First of all, there's user trust. And second, you point out that does Google actually even have a potential to break back into the market at all, given the dominance of the Chinese services that are there already?
Yeah, it does seem on the commercial front that China has kind of moved on without Google, for better or for worse. And look, it's for people like me who want the world to come closer together. The internet was supposed to help make that happen, and instead I think what we've seen over the last few years is not just in China but in other countries around the world where the government has used the internet as a tool to make the world a more closed place, to crack down on global information, to censor, to shut down dissent. And that's certainly what we've seen in China to a large extent without Google being there. And now, of course, they're trying to make these compromises to potentially come back.
So, Bob, the economic potential is obvious, 722 million internet users in China. But on the moral side, wasn't it Larry Page and Sergey Brin who personally decided to pull out in the first place? They're still at the company. What's different now? You know, why has the moral calculation actually changed?
Well, that's a very good question. I can't answer that one. But Sergey certainly at that point argued that he did not like the authoritarian, totalitarian nature of the regime. He had come from the Soviet Union with his parents, so he clearly took a personal offense to what was going on. Also, the Chinese had essentially invaded Google's search engine, and that did not make anyone there happy. What's changed? It's only gotten worse as far as I can tell.
So, Shira, talk to us all about the political atmosphere here. This would certainly not be something that I imagine President Trump would be pleased about as he is waging a trade war on China.
Yeah, the politics are interesting. You know, you had that clip from Senator Rubio, and I think he's been very clear on how is it that Google, on the one hand, can refuse to do work with the U.S. Department of Defense on this military drone project. On the other hand, it's willing to kind of help the Chinese government censor information from its own citizens. That's a little bit of a hard sell in some corners of Congress. And yeah, the politics are going to be very interesting, that given the trade tensions, or trade and beyond tensions between the United States and China now, it's not even clear to me that Google would be permitted by the Chinese government to re-enter the country with search or with its other commercial services.
Well, that's certainly another question. Bob?
No, I would agree with that. And I think one of the things we have to look at very closely here is uncertainty, both in terms of what the Chinese government will allow and in terms of what Google wants to do. People are treating this as a done deal, and it's by no means a done deal. But the fact that just a beginning of a story about this has outraged so many should be taken as a pretty serious thing by Google.
it's anything but a done deal, Bob. You're right. It also sets the standard potentially for, a country-specific internet. And whenever we ask Alibaba or Tencent or Baidu executives about censorship that they all abide to, they say they're just following the law in their home country. Google could certainly say the same thing. But if this happened, what are the standards it would set for other companies like Facebook, for example, which is still blocked in China? I mean, could you see a domino effect, going against, freedom of access to information?
Well, I would argue that Facebook will never get into China. And the reason for that is that its fundamental utility is as an organizing tool. It allows people to organize. And that's the last thing that the Chinese government wants its people to have. Google is in a different place here than Facebook is. There are already plenty of search engines over there. And one of the big questions the company has to look at is it worth it economically? When Baidu, the chief competition, already has about 75% of the search market.
Now, Shira, in her piece, reminds us of a hack attack that originated in China in 2006 on Google, where the hackers were trying to access human rights activists' information. Bob, what was it like being on the inside of that?
Well, I wasn't there for that exact attack. But it's definitely one of those things you worry about a lot ever since something called the She Tao case. She Tao was a dissident. Yahoo had a partnership and had to turn over data on that dissident to the Chinese government. Once they did, the Chinese put him on trial and put him in jail for 10 years. Now, any company that's operating in China, their data is fair game for the Chinese government. And if so, they could be seen as, and in reality, complicitous with that government. That's nothing that most companies want to have on their hands.
Right. The government also requires that all of that data be stored on local servers. Right. Okay, Bob Borston of Albright Stonebridge, thank you so much. Bloomberg Shira Ovide, great piece. Check it out at Bloomberg Opinion. Now, if you want to start a new gig as an Uber driver in New York City, you might have to hurry. New York City's council is poised to approve a one-year cap on new licenses for Uber and other ride-sharing services. The council says this is part of a sweeping package of regulations intended to reduce traffic and halt the downward slide in drivers' pay. Mayor Bill de Blasio tried to pass a similar bill 3 years ago, but the city council killed it after an Uber TV ad campaign featuring drivers and customers. The number of ride-sharing transports in New York has jumped from nearly 13,000 in 2015 to more than 80,000 now. Coming up, the iPhone. It's been Apple's lifeblood as one of the world's most popular smartphones, but in India, it barely registers a pulse. How Apple plans to change that next. Plus, Facebook shares rose Monday on optimism the company is forging deeper relationships with banks. What would these partnerships look like? How do users feel? We'll discuss ahead. This is Bloomberg. A semiconductor company that makes chips for iPhone says it was crippled by a cyber virus similar to last year's WannaCry ransomware. The outbreak at Taiwan Semiconductor shut several factories down just as the company was ramping up production for the new iPhone. TSMC says full operations have now resumed. It expects a 2% drop in revenue this quarter. And sticking with Apple, the iPhone giant is trying to up its iPhone sales in one market where it lags sorely behind the leaders, and that is India. The iPhone is one of the top-selling smartphones in the world, with over 100 million units sold in the first 2 quarters of the year. But in India, very different story. Apple sold fewer than 1 million phones there in the first half of 2018. Xiaomi, on the other hand, sold 19 million. Apple has only about 1% of smartphone market share in India. Compare that with Samsung at 29%. Can Apple turn this around? To discuss, we've got Om Malik, a partner at True Ventures, and Bloomberg Tech's editor, Alistair Barr. So, You spend a lot of time in India. We've talked about Apple's entry into India over the years. What did Apple do so wrong there?
I think they ignored the market for a long, long time. I wrote a piece in 2013, and I said, yeah, they're blowing it. They were nowhere to be found, and India became an Android nation.
So it was too little, too late?
It is too little, too late. I mean, right now it's just yet another luxury product, like Tom Ford clothes, or stuff like in that category of products, because it's so expensive for most of the people. But there is a really growing class of rich people who can afford the iPhone. Unfortunately for Apple, they actually travel overseas so much that they can buy those phones anywhere else on the planet. I think they have really blown it.
So, Alistair, does it all come down to price?
A lot of it does in India for sure, but there's also the retail strategy, which is very different in India. A lot of smaller retail stores and companies like Xiaomi, for instance, and Samsung work very, very closely and offer special incentives, and then they get special promotion in those stores. Apple has tried a version of that, but that hasn't worked very well, and the story that we published today has quite a few details on how they're going to try and change that. So the jury's out, but they're doing a major strategy revamp around there.
I know in the story we talk about these smaller retailers offering deals, holiday deals. That sounds short term. What else?
Well, the holiday deals that they're going to be providing are going to be things like special financing, but it's good they're going to run them not just on holidays, they're going to run them throughout the year. So I think there's going to be some price promotional activity for sure. But then there's special incentives that the store owners get from Apple, and those haven't worked very well, so they're going to be ramping those up. That implies over the long term that Apple is not going to make so much money in India, but that they're going to maybe go for more volume. That's a very unusual play for Apple. They like to keep their margins the same, which is fat.
Right, and the price of an iPhone is the price of an iPhone. It can only really come down so much. Is this strategy going to really help them or move the needle?
If I was to advise Apple, which I'm not, they should just go premium. They should just forget about the budget market altogether. They should create a premium experience around Apple brand, Apple stores. It should be like, position it like a luxury item.
In India?
Yes, they cannot win the market back now because there is so many options at more affordable prices. Xiaomi, as you mentioned, they just nailed it. Like, they have, Hugo Barra did such a great job there in kind of organizing the company and creating a community around the product, that people line up to buy that product because it is still affordable, but not, it's not too common. And I think they found the right sweet spot. Apple, unfortunately, when they sell like a phone for $200 or even $250, they would come across as selling their cheaper phone. So I think the option right now is to go just towards the higher end of the market.
But what's so different about Apple in India and Apple in China, where they're also price conscious, but Apple does a lot better?
There's just more rich people in China right now, like way more rich people in China who can afford. I mean, it's the same difference with the sales of LVMH in China versus India. It's exactly the same. India may be 15 years behind the spending patterns, and the economy is not as robust and as growing as, as big as China. So there's just fewer people with, who can drop $10,000 on a few things here and there.
So more broadly, now we've been talking a lot about Apple hitting $1 trillion. We saw, positive signs in wearables, for example. You have a piece out how time is on Apple's side. I mean, what do you see for the next era of Apple?
I think a lot of the Apple's future is based on the services they create. Like, I think Apple Pay, Apple Music, Apple Cloud Storage, Apple Photos, all these are, services which they can actually expand upon and make more money. Plus, I think the wearables, we kind of laugh at Apple Watch, but seriously, like $5 to $8 billion a year business, which didn't exist 3 years ago, is kind of it's a shame that we actually have to laugh at it, because in any other business, in any other company, it would be a huge win. But it's such a gigantic company that they have to do outsized successes. I do think that they will be creating more products around the wrist. I definitely think they will be creating more products in your house. I think the Apple HomePod is just the beginning, and they will keep coming back in a way that you've seen this company, they don't give up that easy on product lines.
Well, and they're probably not going to give up on India either. We will see. Alistair Barr, our Bloomberg Tech editor, thanks so much. Om Malik of True Ventures, you are sticking with me. All right, coming up, Facebook's never-ending privacy controversies. This time, reports the company has asked U.S. banks to share financial information about their customers. We'll discuss. This is Bloomberg. Facebook shares rose the most since April Monday, off reports the company is forging deeper relationships with banks to offer customer service products via its Messenger chat app. Facebook has, for years, worked to make Messenger a natural place for consumers to communicate with businesses, aiming to replace email. In response to the Wall Street Journal report, Facebook didn't deny pursuing these bank partnerships, but did clarify that any customer information it gathered won't be used for advertising. Could this spark additional concerns around customer privacy? Joining us to discuss, back with us, Om Malik of True Ventures. So investors are excited about this because the stock is up, but it certainly raises the question, can we trust them?
No. One big thing people forget that this is, in my opinion, and in the opinion of many others, one of the least trustworthy companies on the internet right now.
Why?
Because everything they say is not true. 6 weeks go by, and what they said is not true, and it has been a pattern. I think one of your competitors wrote a long piece about the lies and the unending lies of Mark Zuckerberg and Facebook. And I think we have to kind of pause and stop believing these people. And I think in many ways regulators and legislators have to stand up and just say, you know what, every single action they take should be put through a ringer, because we don't know what they're going to do with this information. They never say it, and they only tell you the truth if only they are caught lying.
So, to be fair, they've hired thousands of new people to handle, look at fake news, to work with online harassment, to work to prevent election meddling. They're working on technology so that AI can also help with this job. Privacy concerns around Facebook date all the way back to when you and your GigaOM days, and the company made a lot of apologies, but also worked to right some of the wrongs and change settings. Does any of that matter? Is it their intentions that you think are unpure?
I think after watching this company for a long time, the only way to describe it, like if you have a donkey and you paint stripes on it, it doesn't become a zebra. And I think this is the same situation with Facebook. It is not going to change as a company because its entire core is based on collecting as much information and data as possible and then broker it for advertising. That's it. That's their core business. As long as they're doing that, they will continue to play loose and easy with people's privacy.
But investors love it.
Yeah, but investors also punished, Twitter the other day for actually saying we are removing bots. So investors just want to see the numbers going up without understanding that there are consequences, not just for the society, but also for the company. Eventually, as the trust erodes in the Facebook brand, where will people go?
So we certainly saw some pullback in new users in Europe, and there is this looming question of whether Facebook is running out of new users. You have been off Facebook now for a year, but I wonder, you are more tech aware than most. Do most people care about this?
Not yet. I think just
will
because
they
will, and then they will switch to Instagram, and there'll be another 3-4 years of Instagram kind of playing loose and easy, and then people are going to wake up to something else. And I think the reality is that we have to start monitoring these companies more closely now more than ever, because looking out 5 years from now, when
video and visual internet is all around us, creating fake news and having fake information out there which looks like real information can actually have a much deeper impact, because what your eyes see is more effective than what you read or what headline you read. And I think this is why I feel that the legislators now are actually worrying about the past too much, and whereas we need to be thinking about controlling these companies in the future.
So what should regulation look like?
The regulation should be all around data, how they use data, what they do with that data, having clarity around how they're using it in language that average humans can understand, and also being able to just localize what they can be, what that information can be used for. And I think it is actually gating this company's capabilities as the ability to use and misuse our data.
Is there a world in which you could see, with the right regulation or the right laws, that you'd get back on Facebook?
No.
Why not?
I think I'm done with it. The reason I left Facebook was not just because of privacy reasons. The reason I left Facebook was because I felt I was living my life based on how I felt about other people. And I think that to me was the worst thing.
Oh, Malik.
Thank you.
Giving it to us straight. As always, partner at True Ventures. Thanks so much, Om, for stopping by. That does it for this edition of Bloomberg Technology. With that thought, tune in tomorrow. We'll be checking in with Etsy CEO Josh Silverman after the company reports its earnings, get more clarity on that new digital tax bill, which affects not just Etsy, but Amazon. This is Bloomberg.